A rotten mood today, so hopefully Todd Schoenberger, who joins us right now, can put me into a better mood, can make me feel good about things, feel good about the markets coming up. Todd, welcome to the show.
Thanks for having me.
Todd, all right, we had a couple of days here, up 170 on the Dow yesterday. We're up 36 today. Is this a little bit of a relief rally based on the fact that maybe investors are thinking the situation in Europe might not be as bad as we originally thought?
Yeah, I have to agree with you there, Chris. I mean, the issue in Greece really is a minor issue. When you look at global gross domestic product, Greece represents 0.5% of total global GDP. And plus, the country doesn't manufacture anything. They really rely on tourism. So from the Greece debt issues that are occurring, it could be a domino effect down the road. But right now, short term, yeah, I think traders are actually rejoicing in the news that they've received out of Europe.
So what happens going forward now? You know, where this story has taken over, we had the president talk about the anniversary of the stimulus package today. I mean, where are we? It's just, it seems to me, and you pointed out in your notes, the volatility is crazy. That just says people are confused.
Yeah, you got that right, Tracy. I mean, the first 30 trading days of the year this year, 27 of the first 30, we have had triple-digit swings, either on the downside or the upside, through intraday trading. So and that's typical of post-recessionary periods, only because the data that comes out from the government really is back and forth. Sometimes you have good data, sometimes you have somewhat good data. I mean, today's housing data actually was pretty promising. So traders see that, and they have that type of volatility. You even see that in the VIX index actually going up. So equity investors right now, or investors who can't stomach that type of volatility, that type of risk-taking, probably shouldn't be in equities right now. And you're actually seeing a little bit of that. I mean, we saw actually a bit of a rally in treasuries yesterday, mainly from even though the markets were up big, we still had the 10-year actually only dip a couple of basis points on the yield. So, you know, when you start seeing that, you actually have to think, okay, investors going forward, where are we going long term? My personal opinion is that this is a short-lived rally. I mean, we're going to have this extreme volatility, but we still haven't seen the numbers that are there from the government as far as employment releases, anything really, retail sales. I mean, we really haven't seen the numbers that should substantiate any type of uptrend in the markets right now. So take advantage of the upswings when you get them short term, but long term, it's going to be pretty rocky.
Well, Todd, we are celebrating the one-year anniversary of spending $800 billion to get to those numbers. Are we ever going to get to the employment numbers that this Recovery Act was supposed to get us? Obviously, we haven't gotten there because it was supposed to keep us at 8% unemployment, and we got over 10%. So what do you make of the Recovery Act 1 year later?
Wow, it's a big joke. I mean, you know, the Recovery Act, when you think of it, really did a nice job short term. You know, what Obama really wanted to do was have some type of quick blip. Or, you know, you heard a lot about shovel-ready projects last year. So they actually, out of the entire $800+ billion package, some $24-25 billion was actually devoted to highway improvements, roadway improvements. So that was a quick help as far as trying to get some people short-term back into the workforce, and we actually saw that. You saw a lot of temporary hiring. The problem is, though, is that long term, there's no strategic vision. So this morning, when you have the president, you know, the president's reselling the package from last year, but then he quickly tells you that he hasn't spent everything, but yet now he wants everybody on Capitol Hill to come up with another jobs bill. Well, what was the first bill supposed to do? It was supposed to create jobs, and we haven't seen that. You know, the 9.7% unemployment rate right now really is more of a factor of people not going back into the workforce, not looking for work. They're giving up. They're just demoralized. You really see that in the misery index. The misery index is at the highest peak right now in the Obama administration. I mean, that is crucial, and it's going to be critical in the midterm elections this coming fall. So I'm not too optimistic on the labor picture.
Okay, so there's stagnation out there, basically. No one knows what to do because we're confused, and Wall Street is being driven by decisions coming out of D.C. And yet, you are like in the travel and tourism companies. So people are doing something. Then they're getting out there. They're saying, we've had enough sitting home on the couch.
Yeah, well, if you look at the Dow Jones Travel and Tourism Index as a whole, I mean, it's actually done quite well. It's beating the S&P 500. But when you look at some of the components in there, Marriott, Delta Airlines, Southwest Airlines. You have some people that are traveling. It's not so much the domestic travelers here, but a weaker dollar has enabled foreign travelers to do some traveling. So some of those companies that actually, not so much Southwest, but if you look at Delta and you think of Marriott Corp, where they have hotels, they fly around the globe. Those are the companies that are doing really well. I mean, just look at their stock prices; they're doing extremely well. So yeah, it would be great for all of us here in America to be able to afford to take a vacation. But of course, you need a job to go and take a vacation, and that's just not something that we have now. So, but you see a lot of foreign travelers actually traveling. So it's worked out well for them.
You mentioned Schwab and MasterCard as two others that you like.
Yeah, well, I love Charles Schwab right now. I mean, when you look at the do-it-yourself investor and you think of online trading, a lot of these people will go to the online stock brokerage firms, the discount brokerage firms, the Ameritrades, the E-Trades. What Schwab does best, though, is that they use their technology and their low commission structure as a feeder to get people to move all of their assets. So that what they're focused on are assets under management. Their slogan, talk to Chuck. They really do want you to use the self-service channels, but ultimately they want you to talk to Chuck so that their call center reps can cross-sell you in some of their managed money programs. I mean, Schwab over the next 5 years has projected that their commission-based revenue is going to decrease by 20%, but their fee-based revenue is going to increase by 30%. So they're really annuitizing their business model going forward, and they're going to be able to survive any storms that are out there as far as maybe a double-dip recession or even a flat stock market. They're going to do really well. And as far as MasterCard goes, everybody talks about access to credit. Well, MasterCard doesn't grant credit, but what they work as a distributor of credit. And they have a global presence. So when you look at their control and their branding and their reputation in the emerging market sector, MasterCard is tops. I mean, anybody that wants to access credit, they go to them. Not to mention the fact their technology is state-of-the-art. MasterCard has devoted hundreds of millions of dollars inside their research and development programs just trying to streamline and really speed up the process of e-commerce. They're doing really well with that. I love MasterCard for that reason alone.
Todd, thank you so much. We appreciate you joining us today. Until next time, all right?
Thanks, Todd.
All right, thanks for having me. Thank you.
Todd Schoenberger from San Antonio, of course, with Land Colt Trading. He's the managing director down there and always gives